Good afternoon, everyone. Last time we talked about the adjusted trial balance. And when we talked about the adjusted trial balance, we were talking about it as why are we doing it? What is the purpose? The adjusted trial balance is to ensure that the total of all the debit balance is equal to the total of the credit balance. All right? Now, so in this example right here, you see what we call an adjusted trial balance. And in the adjusted trial balance, you have some entries. We have some entries for accumulated depreciation. We have some entries for unearned revenue. We have some entries for supplies expense. We have depreciation expense. We have salaries payable. So if you look right here in the middle, you will see what we call the adjustments. And we had some practice with that in class. So we're going to look at what we call the closing entries. So we talk about closing entries. We're closing our revenue to our income summary. We're closing our expenses to our income summary. We're closing our income summary to our retained earnings. Right? And just to let you know, there is more than one method to do closing entries. But for today, we're just doing the one we see on the screen. Revenue, expenses, income. And in some methods, there you close from income summary to retained earnings. Some people say income summary to capital. And then we close our drawings to our capital. So that is what I call the read. And in this example, I didn't put the drawings, but I just want to make it as simple as possible. So when we go to class next time, we can remember we're looking only for the word revenue. Then we're closing it to the income summary. We're looking for all of the expenses that we have listed. And we're also closing it to the income summary. One of the things that you will notice, we always have normal debits and normal credit balance. So what is our normal credit or normal balance or revenue? Yes, it is credit. So when we're closing out, we're kind of doing the opposite. So revenue now becomes a debit and income summary becomes a credit. What is the normal balance for our expenses? Our expenses have a normal debit balance. So now we're going to close it to our income summary. And then our expenses all go on the credit side. And we close it to our income summary. Then we're going to close our income summary to our retained earnings. And here we have two income summaries, right? So we're going to take the debit minus the credit, right? We take both the numbers, 3170 minus the 2410, and we get a 760. Now, look at your adjusted trial balance. There's some numbers or some accounts that we call permanent. So cash is permanent, accounts receivable is permanent, roofing supplies is permanent, equipment is permanent. What is temporary? Revenues and or expenses. Everybody got that? So those are the ones that we're going to close out. When we close them out, notice that the cash stays the same, accounts receivable stays the same, roofing stays the same, equipment stays the same. Revenue disappears, expenses disappear. Yep. And all that amount, the difference of the revenue minus the expenses, that's what's closing out to our retained earning. And then the totals also kind of change, right? So Look at your totals for your first adjusted trial balance. Look at your totals for the new post-closing trial balance. So I want you to start looking at this. What are the temporary accounts? What are the temporary? What are the permanent? The temporary accounts, revenues, and expenses. And just to mention, there are two methods of doing closing entry. So again, we talk about revenue to income summary, expenses to income summary to retained earnings. Or we can do it another way. We can just close our entries to our retained earnings. Revenue to retained earnings, expenses to retained earnings. Just skip the income summary step. Everybody got that? So revenue to and expenses, we would combine them. Then, so we'd have a revenue for 3170. We would have our expenses for 2,410 total. And then we just close it all out into retained earnings and we get 760. So we'll do more examples on that. So you have more practice. So how many methods? 2. Right? So I want you to realize that you move from adjusted trial balance, you do your closing entries, then you do your post-closing trial balance. And we are going to see you next class. We're going to practice closing out all of these trial balances. So let's go to the step. First one I have, we start with an unadjusted trial balance. Yes. Then we move on to some adjustments. Then we have what we call the adjusted closing balance. Then we move to the closing entries. And after we finish the closing entries, then we move to what we call the post-closing trial balance. So thank you again, everyone. Until next time, let's practice our trial balances. We're going to move into some bank reconciliations, and we're going to do some sales tax or payroll tax. We're going to do some of those stuff as we journey in this class. So again, we're going to be doing quite a few steps, and we may be going over some principles in accounting, matching principles, some definitions, but not too much. Those you have to commit to memory. So again, thank you. We're going to focus on what we need to do for the next set of classes. Thanks again and have a superb